G'day guys, how you going? Greg here from attitudetrading.com. Thanks for checking out this video, and today I want to just run through and show you how powerful divergence patterns are, in any market for that matter. But in this example, we're going to be looking at the Forex market. I'm going to just run through a couple of pairs with you and just show you how powerful divergent patterns are. Now, if you're not familiar with divergent patterns, for this example, I'm using the RSI, or the Relative Strength Index, and basically that's an indicator that can detect internal weakening or strength in the market. Whereas if the market is trending up and making higher highs, or in the case I'm about to show you here, like a double top, and the RSI is weakening, where it's showing the opposite to what the market is. So in this case here, it will be either level or lower highs. So this is the New Zealand euro, and I'm going to take you through this example first because I love seeing these setups happening. Now this is on the daily, so these setups can happen on any time frame. The higher the time frame, the more powerful the signal can be, as long as there's a few other scenarios in place that set this divergence up. But just for today's purposes, I'll just show you a couple of patterns just to give you an idea, and you can go and and hunt around yourself and to get yourself familiar with these patterns. So here we have, you could say this is, to a degree, it's a higher high, but look, really it's a double top. As you can see here, we've got a double top here, and on the RSI we have what is showing weakening in the market. Now look what happened after that. We've got a beautiful 3-day price drop here, or you could say 5 days, so it's a weekly price drop here, and that just goes to show you how powerful these divergence patterns is. Now this also links up with Fibonacci, and not really what we're going into today, but I'm just going to show you. And as you can see, Fibonacci's hit the 50% fib level, and these divergences alone can be powerful, but when they are in conjunction with Fibonacci levels or support or resistance levels, anything like that, and can add more weight to the actual pattern. So that's the first pattern I'm going to show you, and so we'll just go and going to show you another one here. Now this is the Aussie dollar, and here we have a new high here, and then we've got a higher high, and on the RSI here we go. Here we're showing a weakening in the actual strength of the market direction. So whenever you were to see this with this divergence here, it's showing weakening, and as you can see here, look, prices dropped quite dramatically. These couple of bars here have dropped quite significant. Now I'm going to show you something tricky. We'll go down to the 1 hour and I'll just remove these lines, and this is this divergence here, and I've already actually put it on here, but we'll just take it off, and there's divergence within the divergence. Here you can see we've got a new high here, and then we've got a price has tried to break through, it's tried to rally, and it's been pulled back, been sucked back, and has also formed a reversal candle there. And here on the RSI is showing divergence. So here's the 4-hour one, that was the 4-hour one, which is this one here, and that is the 1-hour one. So it's divergence within divergence. And if you can identify certain patterns on the daily, let's just say a support and resistance area, and if we can see a reversal candle, doji, or something along those lines, and then we can go down to lower time frames like the 1 hour, And these patterns often come up. You see these patterns here. So these are short, quick, swift trading opportunities that you can get in and get out in a couple of hours. I love it when I see these things. You know, as you can probably tell in my voice, you know, they're really exciting because they often come off. You know, and just not divergence. You need to see some candle pattern recognition in there, and there's a you know, a few things leading up to divergence that you know, also validates the move. And I just want to find another one, because another one here, it happened overnight actually, and unfortunately I was out and about, so I didn't get the move. I got this one here, and then you know, went out for dinner, and we've had this one here. Now, here we have, obviously we've got a downtrend, and we'll just go through this a little bit in detail. So we've got a downtrend here, and a downtrend channel. And we'll just go out to the daily, and we'll just see what we can find here. Now, if we scale out a bit, we've got you know, a trend line that's sort of it's quite a large symmetrical triangle, but we're looking at this one here. So we've got a point here, point here, point here, and point here. So it validates the trend because we've got more than three areas where the price is hitting the trend line, and price has come down. As you can see, we've hit that trend line. We go back to the 1 hour, and so we've got a swift move down, which is like the Aussie dollar. That we'll just go back to the Aussie dollar, and I'll show you here. We've got consolidation. We've got a swift move up, and it's the same's happened here. Consolidation, swift move down. So it's an opposite area. So here we've got this point A to point B, and here point A to point B, and we've got a divergence pattern. Now it also coincides with the lower end of the channel here, and also, just go back to the daily, this area here, it's bounced off this major trend area. Okay, so we've got divergence here. So here's another little, I don't like breaking things down too much, but I often look for them. It's just the way I trade. We have a divergence within a divergence again. How cool is this? So we've got this pattern here and this pattern here. You could more say this is a double bottom. So if we're, you know, something like that, that's fine. But we've also got rejection. So we've got two lots of rejection of the candles, and divergence, which is in these areas here. So we've also got another rejection candle in the 1 hour, which we like to always find if we can find divergence followed by a candle. That's the second scenario of the divergence setup that we need to you know, look for. This is something that I actually offer in a free little video course that I offer on my site. But here I'm just giving you a breakdown, and off we go. Nice short, quick, swift move. We'll head down to the 15-minute. As you can see, beautiful, quick, swift move. This is what we're looking for. So we don't need to look for these massive moves. We don't need to, you know, be greedy. This one here, beautiful move. I got some of that the other day. That's a different setup though, and we're just looking at the divergence. So I just wanted to quickly run through, show you what you can actually find when you know what to look for. Again, I offer a free sort of in-depth method based around the divergence setup on my website, attitudetrading.com. Also offer some really good information on your attitude and how your attitude will determine your success as a trader, whether that's Forex or whatever you trade. It really doesn't matter. So I really encourage you to jump over there, have a look, you know, and hopefully you can get some value out of it. So Greg here again. Hopefully you've got some awesome value out of this you know, little educational video I've done for you today. Yep, and we'll leave it at that. And thanks for your time, and I'll chat to you soon. Okay, bye for now.